So in this session, we're going to be talking about where markets are going in relation to bond yields and government debt. So remember that we do run workshops. We've got one on the 16th of June. We've also got a webinar coming up, and we've got one-to-ones, mentorship. We've got a whole array of VIP groups. We've got run a crypto group. We've got a wide variety of facilities in order to enhance your trading and empower you. Okay, so let's have a look at where markets are going in the near future. So remember, the Nasdaq has come to all-time high and is yet to show any signs of turning down. And that's really been driven by AI and ChatGPT. Remember, the semiconductor sector, led by NVIDIA, which has taken off over the last 10 months, is now the number 2 biggest company globally. It has even surpassed Apple, but Apple could also be on the way down, but that's a secondary issue. So overall, you've got NVIDIA, which is now well ahead of its competitors, and even the chairman, the CEO, is going to withdraw $735 million in shares. So what you do have now is a massive drive in the tech sector. And that's really what has pushed up financial markets across the board. What's interestingly enough is that 10-year US Treasury bonds have actually dropped. So the yields have come down to 4.3%. Now that is important. Why? Simply because the yield is an indication of where interest rates are going over the next few months. And those yields have come off. They did rise up last week, but they've come all the way down in the 10-year to 4.3, and the 2 years come down to about 4.75. Again, indication that global interest rates are on the way down. And we saw that recently with ECB, the European Central Bank, reducing interest rates, and the Bank of Canada also reducing interest rates. Next in line will be the UK, will be Australia, and obviously will be the US. Now, you've also got the non-farm payrolls coming out for the month of May, and that will show potentially a rise in the number of available jobs. But remember, the non-farm payrolls in the US, they judge how many jobs are created. So you could have one person creating 2 jobs, and that essentially means that the numbers are out of sync, because real unemployment in the US is running at about 7.5 to 8%, as I stated clearly in my podcast, which I do on a daily basis, which also you can download in Spotify if you need to get hold of that particular recording session, which is done on a daily basis. So you have now a situation whereby the non-farm payrolls will probably come in higher. Joe Biden and Washington and the Democrats are trying to portray an image or project an image that everything is great and the markets are rising up. There's lots of liquidity, the economy is doing well. Not the case. The markets are rising up due to ChatGPT, but overall small to medium-sized businesses are suffering terrible, with the main cost of living running at around about 18%, not 2.9% inflation, which is the number that is published. That is a non-real number. If it was 2.9%, then surely I would be happy, and all of you as viewers would also be happy with the 2.9% inflation rate. So as bond yields fall, indicates that interest rates are going to come down, and that's going to push markets higher. Interestingly enough, keep an eye on gold and oil because of tensions in the Middle East. And Hezbollah is constantly attacking Israel in the northern border. So Israel is going to go to war with Hezbollah, which is the number 1 terrorist proxy of the Iranian Islamic regime. So you've got a geopolitical play out there, and that could pull in other forces into the war, where they've got Iran, Iraq, Syria, Lebanon, the Houthis in Yemen. All of them could get involved in a regional war, and that would push up the price of oil. I'll be doing a separate seminar just on oil and gold in itself. So if you want to know any information on that, you can contact me as well. But overall, as bond yields come down, markets will continue moving up. Moving on to Bitcoin, interesting one on Bitcoin. Bitcoin has been range bound between 62 and 72. It's now the upper end towards 71, 72. And you could see it break out above 72. If it does, then it's going to shoot up all the way to 85 and 100. The other one to watch, which is very popular, is the memes, is GameStop. GameStop, code the GME, moved up recently from $11 a share all the way up to 45, looking to go to 65 or even 80. So that's an interesting one. A lot of activity in GameStop, very volatile share and does attract a lot of publicity and a lot of attention from the traders that are looking to play around with that particular stock. So overall, it's been a pretty busy week. You've had oil, which is all the way down, picked up a little bit. Gold went down to 2303, picked up to 2374. You've got the Nasdaq at all-time high. The Dow not yet gone back to its all-time high. The S&P all-time high. The FTSE UK 100 is struggling. Bond yields have come down and Bitcoin is creeping up. The question is, when is that turnaround going to come, when the markets are going to go down? Because they're very overvalued, and it looks like there is going to be some sort of pop that's going to end up taking those markets down at least 10 to 15%. But who knows when that is going to happen. Have a great weekend. Catch you later.